Schulich Asset Management. We're here today to present to you our U.S. large cap market neutral portfolio. My name is Michael Liu. I am the Chief Investment Officer at Schulich, and I'm responsible for the oversight of the fund's strategic asset allocation. I obtained a Master of Finance degree from Schulich School of Business, and I have a Business Administration Bachelor's from York University. Here with me today are my colleagues, who will also introduce themselves to you.
Hello, my name is Rami Ababa. I'm the Portfolio Manager at Schulich Asset Management. I'm in charge of planning and implementing our investment strategy. I'm a graduate of the Masters of Finance program at Schulich School of Business, and I've completed my undergraduate studies in electrical and computer engineering at the American University of Beirut.
My name is Mike Wong. I'm the Senior Quantitative Analyst at Schulich Asset Management, and I specialize in writing financial modeling software. I'm a Master of Finance graduate from Schulich, and I studied computer engineering from undergrad at the University of Waterloo.
Hello, my name is Kevin Wang, and I am the Director of Research at Schulich Asset Management. I am responsible for following the macroeconomic development and generating new ideas. I am a graduate from Master of Finance program at Schulich School of Business, and I have an undergrad degree in finance from the University of Toronto.
Hi, my name is Thomas Zhang. I'm the risk manager at Schulich Asset Management and mainly responsible for overseeing and maintaining our portfolio's risks. I am a Master of Finance program graduate from Schulich School of Business. I completed my undergraduate degree in risk management science at the Chinese University of Hong Kong.
The fundamental premise of our investment philosophy is that superior results can be achieved by systematically exploiting the behavioral biases and judgmental weaknesses that influence investor decisions. We believe that the market overreacts to both good news and bad news in price movements that do not match company fundamentals. To explore these biases, we use a quantitative investment model that ranks and screens stocks that have a potential for near-term appreciation. The strength of our strategy is that it avoids introducing the process of judgmental biases and behavioral weaknesses that would otherwise affect the investment decision.
At Schulich Asset Management, we use the four-factor model for our quantitative analysis. They are value, price momentum, earning momentum, and risk. For value indicator, we look at the relative dividend yield and the price multiple for each stock. A stock with high dividend yield and low multiples is considered cheap and are good choices for a long portfolio, whereas a stock with low dividend yield and high multiples is expensive and is a good candidate for a short portfolio. For price momentum, we use the relative price strength to help us identify the best performing stock relative to the market. When the stock keeps making new 52-week highs, they're considered good buy candidates. A good sell candidate would have performed relatively poorly to the market and is in a downward trend. For earning momentum, an upward earning revision is a positive indicator for the potential price appreciation, and stocks with this attribute is assigned a high ranking for this factor. A stock with a downward earning revision would have the opposite effect in our model. Finally, we use different measure of risk indicators to value the stock's risk factor. A stock with low return volatility and low short interest positions are considered to be less risky and are assigned a higher ranking for this factor, whereas a stock with high return volatility and has a high short position are considered to be carrying a high degree of risk with them, and thus it is assigned a low ranking for this factor. Once we have all the rankings for all the factors, different weights are assigned for each different factors, and together they will construct an overall ranking for all the stocks in the universe.
Schulich Asset Management uses quantitative technique to select individual security from the Russell 1000 index. Stocks within the top 5% of the ranking are the candidates for the long portfolio, while the stocks within the bottom 5% are the candidates for the short portfolio in the Schulich market neutral fund. For the long portfolio, we then optimize the weights among the top 50 candidates from the long side, with constraint on sector exposure. To minimize transaction costs and improve trading efficiency, we eliminate the stocks with optimized weights they are less than 1% in the portfolio. For our short portfolio, since the short selling can have unlimited downside potential, we construct the short portfolio that its weights are inversely proportional to each stock's volatility. At the same time, we take into account the beta on each side of the portfolio to making sure the overall portfolio beta reaches market neutrality. Portfolio turnover is approximately 40% under each strategy. And now we are going to ask our CIO Michael to tell you more about our trading strategy.
In terms of trading strategies, stocks are kept in the portfolio as long as they don't fall below the 30% threshold. For instance, the position of a stock in the long portfolio is maintained until it falls below the 30% threshold in our quantitative model. Once it crosses the 30% threshold, the position of that stock would then be closed. And this is symmetrically applied to the short portfolio. On the other hand, when stocks move within the 30% boundary, we would rebalance the portfolio to control risk. For instance, we look at stocks that move greater than 10% with respect to their last closing price to trailing 10-day average price and their volatility contribution. And we use such information to determine whether to add or reduce our holding position of these stocks.
The annual target return of our portfolio is 10%, which reflects our competence in generating zero beta alpha. So far, we have achieved 15% return within 2 months, and we are very confident of our year-end performance. As for portfolio risk measures, we use trading 60-day volatility and intra-portfolio correlation for both of our long and short positions. Generally speaking, our portfolio did a good job in diversification of risks. The short position is more volatile than the long position because we have more short bets on cyclical industries, which can be reflected both in trading 60-day volatility and IPC. However, as an integrated portfolio, the lower IPC, which is around 0.2, and lower VOL60, more specifically as mentioned by Kevin, our portfolio is also well balanced in terms of sector allocation and sector volatility, without too many bets on one or two sectors. Although our portfolio has a relatively short bet on energy sector, it has successfully helped us earn generous profits in the past 1 month. All in all, our portfolio is your perfect choice of seeking alpha while we can protect you from unnecessary market volatility.
We thank you for this opportunity, and I hope our US large cap market neutral strategy is a product that suits your investment needs. And we hope you enjoyed our presentation, and thank you again for having us.